Good morning. Welcome to Admiral Markets webinar. Thanks for joining. My name is Chris, and we're going to focus, of course, on technical analysis and the charts. First of all, though, we have two disclaimers to discuss. One is the fact that this webinar is shown to a global audience. Please take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity for more details and to find out if it is suitable for you. Also, please be aware that trading for exchange and global financial markets, or trading them, I should say, is considered high risk, may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer, plus you are aware of the risk involved when trading. All right, just to give you a bit of introduction how I take a look at the charts during this live webinar. I have made new 4 slides so that anyone who is new gets a bit of background on how we analyze the charts. Okay, so when doing discretionary technical analysis, most of the time that's our focus, and it depends. Sometimes we focus on different tools or indicators, but ultimately these 4 steps are always kind of the route we take. It just depends like what tools we specifically use to define the trend, for instance, and then look at momentum. But ultimately, that's always the first thing we want to keep an eye on. What is the trend? Where's momentum flowing? Momentum, of course, is fast price action in one direction. A trend is an established, basically channel or clear, price action below moving averages. This is obviously a great example of the euro-dollar channel and shows basically the overall fall to the downside. Step 2 would be looking for opportunities. So we have a trend, great, but at what spot do we enter? And for opportunities, it's great to use fibs. Let me see, I think it's hidden here. Yeah, all right, there it is. Fibs and patterns, for instance. So today I would like to actually focus on patterns. The dollar yen yesterday or earlier today had a great bounce at the 38.2 fib, for instance. That is, for instance, an opportunity. But today we're going to focus on patterns. Then we have discretionary filters, for instance, tops and bottoms, perhaps pivot points, anything that spells warning basically for a potential trade. In this case, for instance, taking a long in the green box here, so close to the resistance spot, would be hazardous, right? Because that resistance spot has a high chance of stopping price and sending it back down. Last but not least, when all the 3 steps before that look good and there is a trade, an entry potential there, then it's good to know where's the reward, where's the risk, so where's the take profit potential, where's the stop loss, and is that a good reward to risk ratio? And then I decide where the decision zone is. For instance, with the pound USD in my yesterday's weekly recap video or the heads up for the week, I was saying that this 50 fib, right, these fibs, 38.2, 50 fib could be a bouncing spot. I said that this is a falling wedge, and a break of that falling wedge should be a breakout to the upside. So what is the decision zone? The decision zone is the 50 fib, is the 38.2 fib. What is the trigger? The trigger is the break, right, the purple box here. And that went indeed for 95 pips upside. That was the potential so far in total, maximum, right? Now, we don't have to, or probably shouldn't count on getting every single pip of that maximum, but it shows you the potential at least. So that was a breakout discussed yesterday, and that's an example of a decision zone and the trigger at that zone. All right, so this is the way we tackle the charts, hopefully every Tuesday, Wednesday. Now, if you're curious what video, you can take a look always at Admiral Markets videos, Admiral Markets YouTube channel, and you'll see yesterday weekly Forex overview. And basically this is where, the things that I just mentioned, the dollar yen bounce at 38.2 fib, the falling wedge on the pound, all were mentioned yesterday. In fact, I don't think I had a fib on this chart, as you can see, but I did talk about the falling wedge and the break to the upside. All right. So where can you find that? You can find that very easily on the wave analysis. Just go to admiralmarkets.com, click on analytics, go to wave analysis, and you'll see every Monday you'll see weekly Forex overview with this video. So that's how you can find it very easily. Alrighty, enough self-promotion there. Let's see. Euro unemployment rates, unemployment change. We got unemployment rate in Germany and the euro and the CAD GDP. Those are all red tagged events, as you can see, and India 2 growth rate. Friday we got NFP, non-farm payroll. Of course, that's always interesting. Alrighty. So let's take a look. Let's look for patterns and discuss those. So at the moment, the euro dollar I think has a zigzag pattern. If we zoom into the hourly chart, I was saying yesterday that if it's a bull flag, sorry, if it's a bear flag, I always mix them up here. If it's a bear flag, that could be a great pattern, right? Within this downtrend channel for a breakout to the downside, right? That was yesterday. We don't really have a bear flag. So that's out of the window. And the reason why, you might say, is because the retracement has been too steep, in my opinion. This is not typical. This momentum here is not typical for a bear flag. All right, bear flag is shallow retracement. So this is a bit too steep. However, price, if you look at 4-hour chart and you look at this channel, is of course remains in a very nice downtrend channel, good angle, a lot of hits on the top, and price is retraced almost to the top of that zone, the top of that resistance, the downtrend channel. So it's in a very nice selling area, because if you would split this channel into 4 parts like this, which I will not be able to draw too accurately, but just imagine equal quarter zones within that downtrend channel. The best shorts, of course, are in the top quarter or the top half at least, right, in this part. So as soon as price makes a good retracement, for instance, here and here and here, and potentially here. Now, it's not a guarantee, but it is an opportunity. So we got a trend to the downside, check. Do we have an opportunity? Yes, we got a retracement, check. Are there any filters apparent that might be warranting caution? And that's a yes too. There are some filters that are warning us a bit. So we got a good opportunity, we got a good trend, but there are some filters to be cautious of on the euro dollar. All right. So as you can see, I took an example short here on this demo account yesterday already. Actually, that was a trade that resembled what I was thinking about in yesterday's recap. And that's a risky one, and I'll tell you what my backup plan is if the filters are showing some struggle. All right, what kind of filters are we talking about on this euro dollar? What could be so scary about this potential? All right, so potential setup. So first of all, is if we stretch this oscillator, is the fact that we got divergence. Look at these bottoms on the oscillator, specifically actually the second one here. Why? Because the oscillator has gone back to the 0 line right here. That indicates the completion of a leg, of a swing high, swing low. So if we look at the oscillator for swing high, swing lows, then this is one swing high, swing low. This is a correction from here to here. Are you following me here? All right. Then we have another swing high, swing low from here to here. All right. No, here to here, sorry. And then we have another swing high from here to here. All right. So you can see 4 swing highs, swing lows so far, right? And this could easily be the 5th. This divergence, that could mean that there's a bigger retracement to the upside coming. This downtrend could be over. Also, if you look at the daily chart, we got a support trend line coming in. What am I doing here? No. All right, got a support line coming in, a daily, weekly support trend line. That obviously, sorry for those fibs that make it a bit difficult to see. That obviously could be basically a bouncing spot. We got bottoms here too, right? We got a bit of a supply demand zone. So that could be a bouncing spot. It could bounce just to retrace part of this downside, and actually, in the long term, just to give you a bit of a long-term vision, would expect price to rally up to this 115-ish, no, 114.75, I think. Make a bit of a potential head and shoulders here, and then turn around again. So could it bounce at support with divergence on the 4-hour chart up to resistance, make a head and shoulders and turn? Well, that's what I think is the most likely at the moment. But the head and shoulders is something for the future. Let's focus on what's happening now. So Arne is saying that Arne is an Accu Murray Math trader and has been trading it for a few weeks now. And among other things, perhaps, right? It's one of his systems at least. And he says that according to the Accu, at this moment, there's a buy at this point. And that's possible. There's definitely, when you look at different styles of trading, when you look at different systems, there could be conflicting signals. So Accu, that if it's saying a buy, whereas I'm looking at a breakout to the downside, it's absolutely possible, right? We got a correction here. I was looking at this as a zigzag, right? And this as a breakout candle of that zigzag. So that is the discretionary thing I'm looking at. Momentum, correction, continuation. But as you already, I hope I made clear at least, is that yes, there is a lot of things to be concerned of regarding the daily bounce and the 4-hour divergence. This could indeed turn to be basically a correction, and then we go like this. And I realized that. So this trade I took with a low risk, and I will be extremely careful with trade management too, because it is risky. And in fact, I might even change my TP depending on if it struggles too long to 111.10, which is the 78.6 fib, right? Because that's where it could bounce and turn around. Now, it could even turn higher. Let's see. So the divergence is certainly something that might just warrant skipping this analysis. All right. So let's take a look at the 4-hour chart. We got a bearish engulfing twin. That's pretty good too. So I think that for the moment it's okay. But as soon as this is a 4-hour candle that's bullish, I might even exit the trade at break even, or let's say a couple of pips loss. So I will basically, my attack plan, I wanted to say, my trade plan for the moment, stick to this trade. I got engulfing twins. I got a good 1-hour breakout. But due to that divergence, due to the daily support, if there is a bullish candle after the engulfing twin, right, then boom, that's it. I'm out. Not waiting for any follow through, because in that case, what could happen is, it could be a zigzag, a bigger zigzag, price at the 50 fib. Potentially, if there's a bullish candle like that off of the 50 fib, then that could be a bigger correction. Don't want to hang in to that for too long. Alrighty. Let's see. Let me take a look at Accu pivot point. That's a strategy from Nenet, and let me see what, just out of curiosity, how it looks like. Yes, and Arne is correct. The 4-hour chart, according to Accu, and the MACD that Nenet uses is bullish at this point, but there's not a setup at the moment, right? By the way, Arne, because let's see, 3. It's quite low on the Murray Math levels, right? It's at 1/8, which is a bit on the weaker side. Preferably, you want to see the Murray Math price in between 3/8 and 6/8 in the Murray Math, right? And the 1-hour is showing red. So as soon as red turns into thick red, so as soon as thick red turns into thin red, then that could be an upside setup indeed. Do you see that, Arne? Sorry, folks, that's just a quick discussion with me and Arne. Hope you don't mind regarding Accu. Well, I can show it to you. I hope you don't mind. It's a proprietary strategy, so apologies, but At least you know what we're talking about in that case. Look, this is basically, you see this thick here, right here. So that's indicating an uptrend at the moment on the MACD. But the hourly is down, you see? So as soon as the thick turns into thin, there would be a reversal setup, or there would be a setup, in my opinion, a reversal setup on the euro dollar. But let's see if that happens. It might not happen. Murray math basically is a indicator. It's a tool that indicates support and resistance levels. It's a mathematical concept that spaces out basically support and resistance from basically octaves. Now, you got a part of me on that one. Nennet is the one that knows the most on this. I just know how to use it basically, and I learned it from Nennet. More I really don't know, but it's somehow I don't know how it exactly calculated, but it spaces out support and resistance over these levels. As soon as it goes above 2/8 or minus 2/8, then the octave levels change. All right, basically when you're looking at these eighth levels, then if it's above 8/8, it's extreme resistance. This is extreme support. Anywhere in the middle is kind of where it typically most of the time should be, and this is like light resistance, relatively resistance. This is relative support, but basically this is extreme, this is normal, extreme, normal, and this is the middle zone. And you can use that to have an idea about how far price is extended, or if there's a retracement potential, etc. All right. So on hourly, therefore, I'm still cautious because look, you see it's still thick. The momentum is still down on the hourly. So I think the breakout is still looking okay. Unless this changes to thin, I think my breakout could be then in trouble. All right, so let's see how that develops in the next hour and the rest of the day. All right. Let's move over to the pound, okay? Pound USD, well, I took the breakout trade, as I said, and there was a potential, but I moved it to break even, which from a trade management position point of view, in retrospect, doesn't look like a great decision, but what can you do? To me, it seemed like a good breakout. I was actually hoping for price to get up to 147.70, and it didn't get there. So my target was missed, and I didn't use any tighter trade management. So I'm still in that trade. I'm at break even, and let's see if I can catch some more profit or not. The breakout was, in any case, was good. It was I took it, as I said in the video, I took it around here as the price was breaking out. And I liked it because let's take a look at the steps we talked about in the beginning of the webinar, right? What is the trend? It's up, right? We can easily draw a channel if you want, but clearly price is above the moving averages as well. Let's do that quickly. Oh, sorry about that. All right, there we go. Right, channel's up. Then we have an uptrend. So what is the momentum? Momentum is up. Do we have any patterns? Yes, we have a falling wedge, which is a bullish reversal pattern. Are there any opportunities? Yes, prices at a 50 fib. All right. Let me take off this fib so it's a bit clearer, 50 fib. Are there any filters? Well, yes, there is a warning here. There's a strong resistance level. But when price made such a decent pullback, then no problem in taking it there because there's enough space to resistance. And last but not least, the R2R. As you can see, well, as you cannot see actually, but my risk was here. I put the stop loss below here, so it's a very small risk. It was only about 35, 40 pips, maybe even less. I'm not sure, but anyhow, so little small reward to risk, and that's it. So the trigger engulfing twins, for instance, right here, although there is a bit of wick here, so or 1 hour chart, basically this was not a good breakout candle, but this certainly was, right? Or this candle even, because that candle is entirely above the resistance trend line. All right. Or even the breakout above these tops right in here would not have been bad. So at this moment, I'm a bit cautious. If we look right now, this was a steep retracement, way steeper than I expected, obviously, because I would have been out of that trade if I expected this. The momentum is catching me by surprise, to be honest. I would have expected a bull flag and a continuation for one more push up. So, well, sometimes it doesn't go as expected. This little part is definitely not expected. The thing is, maybe, I don't know how to explain it, but I think that this push up happened during Asian session, which is quite rare. It was 90 pips up in an Asian session is really rare on the pound USD. So maybe that's why the collapse is a bit faster. But whatever the case is, there is bearish momentum at the moment. I would not recommend any longs at this moment. I mean, it is possible that this is still a retracement. This is an ABC zigzag, and now we build on the upside. Let me take a look at where the pivot points are for today. Let's see. Well, price is right at the pivot. The pivot is 146.50 actually. So at this moment, I would not be interested in a long. But if there is, because I'm expecting price to make some triangle here, due to the volatility that we're seeing, I think it's going to calm down. Price is going to stabilize. It's going to respect support and resistance a bit. I think there's a good chance at least. And if it makes a triangle like that and then breaks a triangle, I might think about adding a scale in though, right here, upon the break of that triangle, upon the break of resistance like that. That's something I would consider. Not at the moment. I think it's not worth it. But if it shows a pattern and then breaks that pattern, then I think it's worth it, because ultimately we're back at the bottom of the trend channel. Yes, we had a strong wick here, and this could lead to a retracement, which we're seeing right now. But we're still at support, and I think that if there is a pattern here and we break that pattern to the upside, that is confirming that price is continuing with this trend to the upside. Now, is there a reversal potential? Perhaps you might be wondering. Well, let's take a look. If there is one, then it was this wick, but not right here. Price is right at the bottom of this channel, so that doesn't make sense to go short. I think it would only make sense to go short if price actually puts a 4-hour candle below this trend line, breaks this bottom, all right, and then shows a bear flag. That's the only way at this moment that I can contemplate taking a reversal. Or if price gets higher, if it shows struggle at 147.50, for instance. And struggle, I mean that it kind of like relatively slowly maybe gets up to that level, bounces, you see a bit of momentum, and you see a hook back like that. All right, so those are the majors. Regarding the euro dollar, I forgot to say that the pattern I'm looking at is basically a zigzag pattern. I don't think I mentioned it. Oh, wait. There we go. And you can see that price hit this 272 target. So maybe that completes the zigzag. Maybe not. Maybe that's why I'm going to be very cautious about the 4-hour chart, because this could also be like this, a Fibonacci pattern that we see very often. All right. Dollar yen. Dollar yen was talking about the 38.2 fib bounce yesterday in my video as well. That worked well. That happened during a session. I didn't have a pending order, unfortunately. So I took it upon the break of this resistance. And I'm in that trade now looking for continuation. And its price is about the same spot. I have the stop loss below this bottom. The risk in this case is about 50, 40, 45 pips. And I'm looking for a push up to 111.75, which will probably be about 55. It's about a one-to-one trade, not great, but I do think that there's a good chance of a follow through. We had a great triangle break last week, good momentum. We had a classical ABC zigzag back to the 38.2 fib. So looks good. Let's discuss it again. Do we have an uptrend when looking at this 4-hour chart? Yes, we do. Higher highs, higher lows, and we could put a channel on it. I think we could. It's not a perfect bottom, but we could adjust it a tad like this, and we could obviously see a good upside slope. Then do we see momentum? Yes, we got momentum here. Boom, 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 boom. That's good. Do we have any opportunity? Do we have a pattern? Do we have a fib? Yes, we got the fib. That opportunity is already behind us. That was earlier today during the Asia session. We had a retracement pattern, zigzag retracement. Yes, patterns. Okay, filters. Well, if there's any filter, price is pretty close to the target. That's the only thing that's a bit worrying. But I think there's still okay space, one-to-one trade. Engulfing twins, by the way, another pattern. So I think there's still okay space. Decision zone, well, the fib or the engulfing twin. And R2R, well, it's one-to-one, so it's not great, but it's okay. That's about it. So this is my opinion. I mean, if price retraces a bit more, let's say if it's, I don't know if it will get there. At this moment, it's kind of building on a 50-minute chart. You see a bit of an ABC pattern here. And there's a supply-demand zone right here. I'm not sure if it'll go break through that. If it does, then perhaps it could retrace a bit deeper to back to the moving average, back to this bottom, I would say. For the moment, maybe 111, 110.90. So there could be a bit of a better retracement, better entry point. So let's keep an eye on the dollar yen. So is this clear so far what I've said, or is there anything that you would like to follow up? Is there anything you want to ask me? And in the meantime, let me ask you, what would you prefer for tomorrow's strategy topic? A, Fibonacci. B, Fibonacci and alligator, I should say. B, waves. All right. Let's see. C, patterns again. Or D, something you like. So let me write that down before I forget myself. Fibs, alligator. That's A. B is, now I forgot, I think it was waves, right? And C, patterns. And D is your choice. So I hope this is clear because maybe I was a bit fast with this and I maybe lost some of you. So I hope that this didn't discourage you. But so therefore, I'm asking if there's anything that you want to clarify, just feel free to ask me and we can discuss it again. The pound, in the meantime, looking like it's continuing and it's going to take me out here for break even. I think that the momentum is strong at the moment to the downside. So I think it was a good decision to wait for not buying, at least, that's for sure. Let's see if we get the triangle still. Your dollar has a doji, but seems to be continuing lower as well for the moment. We've got a new lower low. So let's see. Time will tell how these three trades are going. Pound looks to be out very soon. Alrighty, so I got some preferences. I'll take a look at that in a second, see which is the winner. You still have plenty of time to react and voice your preference. I got two Bs at the moment, and I got one fib and alligator. Ergo is saying volume, but that's something I don't use myself too much. I don't think I could really um, add add a lot about that. So I think that would be difficult for me. Let's see. Um, Maybe dollar yen completed V shape and it will go down. It's everything's possible, but with this momentum, such a strong momentum without divergence, I wouldn't think it's very likely. Uh, I I mean, it could get to the 55th. It's possible, or it could get down here, right? But I don't see it necessarily breaking this trend line and reversing from here. But you never know. It sometimes happens that you get just one big move and then it kind of fails. But it doesn't happen often. So statistically, it's a low probability, but it uh, it will depend, I guess. Let's see. The daily candle is pretty good as well. For that to be a bit more likely, today would have to fail. Today would have to turn into a bearish candle and close like this or something like that. So let's take a look at the other pairs. Do you have Ergo also chooses waves, by the way. So we got three waves at the moment and one Fibonacci alligator. So let me take a look. The Z10, if we can do next week, we can do Fibonacci alligator. We can do it on Tuesday or Wednesday, whatever is good for you. You just let me know which you prefer next week, Tuesday or Wednesday. We'll do it then. Z10 is saying for the engulfing twin, no one is able to know till twin candles are completed. I'm not 100%. I think what you mean is that sometimes it's difficult that you're too late with engulfing twins. Well, I'm not 100% sure how to if I interpret your question correctly, but in this case, um, I guess when you see engulfing twins completed, that's actually when you get the signal, right? So now I'm not sure if this is the best. This is not really engulfing because you got a wick here, but um, here, or let's see, we've got a better example. This is it's engulfing. It's not very strong, but so that once it's completed, once the candle's closed, then you have a confirmed engulfing. Alrighty. Pound yen continued nicely last night, and I was looking at it and I was thinking about upside, but I decided not to take it when I'm not behind the chart. But this looked like a three-wave correction here, and I was thinking it could make that dash to the target. It did. That's nice. Now it's bouncing off, and I think that this is showing. If we look at the pound weakness at the moment and the yen hesitating, the pound yen could be maybe up for ABC correction here. We have divergence between these tops. We got momentum here. So I would expect this is still a bit of a bouncing spot right here in this zone. So I would expect price not to break through that without any respect for that zone. So a bit of a pattern at that support level. If it's a bearish pattern, there could be a bigger ABC zigzag down to 161. The best would be to put a fib from here to here and then look for the minus 61.8 target. The same was actually valid for the pound odd, but I was a bit unlucky with this trade. I put my stop loss too tight, and I got knocked out of this trade. But I was short. I was looking for a downside reversal, and I was looking basically, looking at potential head and shoulders here, basically seeing impulse and correction. Right, this was a very slow upside. And therefore, I thought it was warranted to take and look for a reversal. I'm not a big reversal fan, but sometimes it does make sense. And I thought that there could be a good chance of that. We saw engulfing twins here, and there was some news event, I guess, on the Aussie because price went up and then down, and we eventually got a breakout to the downside. So the reversal is taking place as expected, just fortunately without me, but those things happen. And let's see how far it can push. I think that considering the strong 4-hour candle here and the space it has to the moving average, that could be a pretty sizable momentum. But for the moment, the standard target is the minus 61.8 target at 20060. All right, so is there any way to catch it now? Because it's already turned at the fibs. So is there any way to take this reversal trade? So first, let's do the step one. Is there a trend that's to the upside, right? So why would I be looking for shorts? Well, the trend, sometimes gets corrected, sometimes is overextended. So yes, this is a trend to the upside, but we see substantial weakness at this moment, I think, due to the head and shoulders pattern. There is a bit of divergence present as well between these tops. If you look on a daily, a bit of resistance zone as well. So anyhow, are there any patterns? Yeah, we got a corrective bear flag here, or at least, or maybe a triangle, better said, like this. Broke that triangle. So any particular setup that could be interesting still? I think that the price would have to bounce off the 272 target, go down to the target. It's now too close to target for me to be interested. Would have to hit the target and would have to show either a channel like this that gets broken, then there would be space down to the minus 61.8, or like a bear flag, for instance, or there would have to be maybe a zigzag that brings it back up to, for instance, 203. Here there's a bit of a supply demand zone right there. Broken bottom. That looks interesting. So at this moment, no. At this moment, it's too close to target. I don't trade that close to target. Doesn't make sense. Even though there is a slight chance it could just push through and go right to the main target, there is an intermediate target that All right, folks, sorry about that. I think the internet dropped, and I hope that you hear me again. Let me share the screen again if you hopefully can see this. All right, so just checking, can you hear me and can you see the charts? All right, cool. So yeah, that was a good breakout, good reversal example of a good reversal trade, I think. And now potential continuation if there's a continuation pattern at this 272 target. All right, that's the quick analysis. Other pairs, Aussie. Well, I'm not that interested in Aussie at this moment. It made a huge upside. Maybe a continuation reversal trade to the upside actually could be the only thing that's interesting, but let's take a look at that. It is at resistance, so a bit of retracement could happen. I wouldn't say this is a trend, so I would probably rather skip the Aussie. But if it shows a bull flag and it hits the 38 or 50 fib, it could be a continuation. I'm not a big fan of the Aussie at the moment, though. How about the Euro Yen? Also not my favorite pair at this point. I don't see a trend. I like trending environments. The Aussie and the Euro Yen don't look like a good trend at this point. And sometimes reversal trades are good, but at this point, a reversal trade right into resistance, I think, is not worth it. So that does not look interesting to me. Let's see if there's anything else. The Kiwi. Let me change these templates here. All right, the Kiwi, same story. In fact, it is close to resistance, but this trend is very, very weak. All right, dollar CAD. Well, there's been some good upside, I think, recently. Good recovery, but still, it's not particularly. This is one of those pairs where it's hanging in between, right? You had a downtrend, but that broke. But the upside looks corrective because there's divergence between these tops. Look at this divergence here between these tops here, and made it back all the way here. Too much of a mixed bag for me. I do not do that often. I don't trade the dollar CAD actually often, but if I do, I guess I would look at it. I don't remember even last time dollar CAD. I haven't traded it for so long time. Let's see. I think it was probably half a year ago. Maybe it's still this upside. Maybe some reversal trades here. I normally take a look at gold and silver and oil at the beginning of the week and then about once in between again. So I don't do it regularly, but it's more something like just to get a sentiment about what's going on, and that's about it. Pretty good rally though, as expected. Getting close to the target, and I think that could be a turning spot here. It looks like a rising wedge at this point. Let me show you like this. Rising wedge. This was that correction we talked about. It broke above it, made a pattern above it, continued, and it's showing a slower angle. It's showing corrective price action. There's divergence. We're getting close, or we're at the target or close to the target. So a bit more push up, very slowly like this perhaps. Hit the target, and I would expect a correction down. Gold is recovering to the downside, silver too. S&P is really pushing, it's knocking on the door of that top. And I wouldn't be surprised if it breaks. This is looking like a correction, and we can start heading for higher highs, I would say. At the moment, it's looking more and more likely. All right, some other pairs. Let's see, New Zealand at support. Could be bouncing spot for Aussie. Not necessary to trade, but when deciding if to trade Aussie or New Zealand, that could be interesting. Euro is very mixed bag. That does not look interesting to me. Let's see. Let me scout the charts, scan the charts to see if there's anything interesting. Pound New Zealand, like Pound Odd, is making a reversal as well, I think. Looks like a channel that's being broken. So if you get a 4-hour candle below this channel with a close near the low, I think it could be a reversal trade that's worth thinking about with with the target at minus 61.8, stop loss above this top. It's a big stop loss, big target too. Let's take a look at the euro pound. Alrighty. Making a bit of a consolidation. Not respecting these targets all too much. Actually, let's take it away. This looks a bit better. So let's see, if we can break through the support, there could be a small continuation down to this target. Otherwise, it's in the correction at this moment. Alrighty, so anything else? Let's see. Swissy perhaps. Take a look at pound CAD. Nice zigzag as indicated here. 38.2 fib, right up to the minus 61.8 target. And this could be a heavy resistance zone. There's a 38.2 fib and a 61.8 target. So these are the fibs we had on for a while, and you can see that they all went to target right up in here. And it could be basically getting to a head and shoulders here, I would say. Considering the targets, considering the momentum here, and the correction that we see here, I would say it's looking just like on the other pound pairs that there could be a bit of a pound retracement here. So it's I don't want to suggest that all of these are good ideas. It's all riding on the pound, I would say, almost, and its ability to correct, because it's similar ideas, in fact. So, but this one confirms what we see in the pound odd and pound New Zealand, I would say, as well. So there's a bit of synergy there. So pound weakness, I guess, is an important element of that. Oh, all right. So we got a lot of other pairs still, but I'm not sure. I didn't look at them. I didn't scan which ones are the most interesting, perhaps, if there's any on these more exotic pairs. But odd is beating CAD nicely here. Seems to be a bit of odd strength. All right. So let's take a look again at the majors, see if there anything new has happened. We can make a recap. If you have any questions, by all means, of course, let me know. Let's see. I see 2 questions actually. Well, thank you very much, Zitan. Appreciate it. And well, I think maybe you could get to a spot where you analyze the charts similarly, maybe a tad with a tad less experience, if I could say, but I think 2-3 years you can. I mean, 2 years I think is good enough to, if you focus on discretionary analysis and you do 2 years of that, I think you already have a lot of experience under your belt, and I think that's already a great place. So some of you might think only 2 years, is that too little, perhaps? But 2 years, then you've seen all market cycles twice. So you've seen, well, because when you see it the first time, certain patterns and stuff like that, then you don't have the confidence yet to trade it, I think. Then if you see it again, then you get more confirmation, you get more experience, and you have more confidence. So from that point of view, I think 2 years, you can already do a great job within 2 years. But of course, it depends how you trade those 2 years. If you're trading very mechanically, then it would not be the same as if you learn to read patterns, learn to read trends, look at filters, and use these concepts. If you trade only mechanically, then you're not building any experience in that category. So, right? So that depends on how you use that time too, of course. But I think with 2 years you can get really far. For those that think, oh boy, 2 years, that seems so long. Actually, the opposite. Realize that I think it does take that at minimum, because you just need that confidence. If you look at patterns for 1-2 months, you're just not going to get that far. I mean, you get far, but it takes time to build that. I think the confidence. That's why. Bear flag pound CAD. Let's take a look. Yeah, I agree. It is, I think, a bear flag. As long as it stays below the 50 fib, it's a bear flag. It's a corrective pattern, which is at this moment looking like a bear flag. We got good momentum too, and definitely bear flag. I guess I didn't say that, but yeah, great addition there. Great comment, Aiton. That's absolutely bear flag indeed. Good momentum. Channel, which is not breaking the 50 fib. Corrective channel, weak angle. Yes, absolutely. So let's take a look at the majors. I have, at this moment, 3 monitors. I'm thinking about a 4th one actually in the near future. And what I basically have is, there are 3 screens. I have, one is showing Accu, one is showing HARP, and one is showing a blank, let's say, price action screen. So I have basically 2 proprietary systems on, and one kind of like neutral chart, something similar to this, with a blank with 2 moving averages, fibs that I like, and trend lines that I like. Let's say more of a blank chart approach. All right, so Eurodollar majors, well, it is showing some struggle with downside. Let's see once again how this 4-hour candle closes. If it's anything like this, in fact, I would move the stop loss right above this candle high and reduce the risk to -1 pip or so. All right, so that depends on how this candle closes, I would say. If it's bearish, if it closes down here, I think I might even still move the stop loss, but then I feel a bit better about the outcome of this potential trade. The potential outcome of this trade. Sorry, trying to read about. Let's see. Even the hourly could be good to monitor because if it's a bullish pin bar like that, this breakout trade might go nowhere. So yeah, 20 minutes from now, I'll keep an eye on this candle too. It depends. 1 hour, both 1 hour, 4 hour makes sense. I will have to think about it still. Let's see. Let's see. This is the 4 hour chart. Actually has 1 hour 20 minutes left, which means that after this candle, there's 1 hour candle left. No, I'm going to take a look at hourly candle. I'm not going to take a look at the 4 hour. 4 hour could be too late. It could end up here if it's indeed a bullish bounce. So I'll keep an eye on the 1 hour. If it's a bullish pin bar like this, I will move the stop loss or market exit right away. You know what? I might even use this fractal right in here. That's a resistance spot on the 50-minute chart. I might move the stop loss already, actually. Let's see. This is maybe a bit early, but I think it's worth it. Like that. All right. Risk is reduced, and if it ends up like a pin bar like this, then I would market exit right away. Short trade, I know, but considering those filters we talked about at the beginning, I think it is warranted to be cautious with the downside here. All right, pound USD made a small downside, seems to be bouncing again. So let's see if we get some pause and consolidation. Once again, that's what I'm looking for here. Regarding the webinar, next webinar, I have actually, by coincidence, this is not always so, but by coincidence, I got a webinar this afternoon. I'll send you the link in a second. With Animal Markets, I have a webinar tomorrow, same time, same place, on strategy, 6:45 a.m. GMT time. So I hope to see you then, Aiton. Let's see, Aiton. But I have one today as well. Just give me a second, 15 seconds probably, and I'll grab that link. All right, there you go. There's the link. There you can register. That's got the webinar this afternoon, tomorrow afternoon, and next week the same pattern. All right, dollar yen going sideways. I still think it's okay. It's got good momentum here and break above resistance, making sideways zone. I think it's still more of a continuation pattern, and I'm willing to hang in this trade and take the risk that it goes against me. I think it's still worth it for the moment. What might change that? It might change if this, let's see, the next two candles besides this do not break this high, I might market exit or move the stop loss just below this bottom. All right, so all in all, at this moment, I think there is a bit of a reversal atmosphere hanging in the air because of the pound. and the Aussie, both are actually reversing. So that makes things a tad more risky, I would say. And from that point of view, many of these pairs, I would say, are reversal setups or just waiting for new structures. That same is for Euro Pound and Dollar CAD. So besides the majors, I'm really not, maybe the Pound odd, I'm not really keen on any other pairs at this point, except those reversals on the Pound, I would say, and the majors. That's basically the summary, I would say, at this point. Yep, that's it. So do you have any particular pair you would like to take a look at still? Let's see. Dow Jones maybe still. Bullish candle last week. Hook back to the broken resistance, bounced off of it. Broke the bull flag as well. But resistance is still very nearby. Let's see how price responds to that. All right, no other currency pairs in mind? Okay, great. So let's see how the things develop. I think that at this moment, probably the pound reversals maybe seem the most interesting, but those are always, as I said, reversals are always risky. This is a massive pattern on the Euro New Zealand daily. So let's talk a bit about pattern trading. Pattern trading, basically, what I like to use is find a pattern that is visible on the chart, that basically fits within the screen. So if the pattern doesn't fit because I have to go back, that wouldn't count. So for instance, on the 4-hour chart, I don't see those blue lines anymore fully. The daily chart I do. So this is, in my opinion, therefore a daily chart pattern, all right? And it's a contracting triangle. So I need to see the whole pattern, roughly with this angle or one zoomed in like this. Now, in this case, it would be a weekly pattern. So it depends how much you zoom in. I like to use this particular zoom in. So for me, this is a daily probably. It's not that important. It's just to give oneself an idea about the pattern, what level pattern this is. All right. Okay, so once you have the pattern established, and you draw the pattern, you figure out what pattern it is. In this case, it's a contracting triangle. All right, then you start to look for other clues, like for instance, what is the momentum? What is the trend? Because often enough, if there's an uptrend and you have a contracting triangle, then the breakout to the upside is often enough preferred because there's an uptrend. Very simple. So in this case, on the daily chart, I think you can really talk about breaks to both sides. You got momentum here, you got momentum here. So that doesn't really matter. So the break, I think, could be to both up and down. So once I spot a pattern on a time frame, I zoom in one time frame from daily to 4-hour. If it's on the 4-hour, I'll zoom into the hourly, etc. And I look for the break of that pattern. Then, not only do I look for a break, but I look for a smaller pattern after the pattern. So if it breaks to the upside, I would look for consolidation box. I would look for a bull flag to take a continuation after that. So I look for a pattern, a smaller pattern after the bigger pattern on a one time frame lower. That helps me avoid going long in false breaks like this because I didn't really have a pattern in that breakout there. So let me show you an example what we can use because this pattern has not broken yet. Let's try to find a pattern on a different chart. Let's see. Let's zoom into the Euro odd hourly and go back a few weeks or so. First of March, for instance, just a random date. All right, 1st of March. Here we go. So look at the moving averages. We're in a downtrend, right? So we're looking for a pattern on this hourly chart. I guess the only pattern we can see at this moment is probably this, right? Let's see. Looks like a kind of like a descending wedge, perhaps like this, right? So you got a flat bottom and you got a steep resistance line, right? Or a resistance line with an angle. So that's a falling, no, it's not, it's a descending wedge. Okay. So once that descending wedge breaks, we're looking for a pattern after the pattern. All right. So we'd have to zoom into the 30 or 50-minute chart as soon as it breaks, which is here, the 1st of March at 9 o'clock. So let's go there. So we're looking for a pattern of the pattern. So do we have any pattern of the pattern? Well, I would say we have one here in its entirety like this. That's a box, or if you want to zoom into this piece, this is a box. It's a retracement consolidation box. It's a small pattern after the bigger pattern. So once that pattern breaks, that's what we're looking for. A pending order right below that, or some mark order anywhere in that pattern. Those would be kind of pattern trades, small pattern trades after the big pattern break. And boom, you get the continuation. So that's an example. Let's see if we can find one more example, perhaps even on, this is a kind of like, this is a bear flag on a 50-minute chart. So once this bear flag breaks, let's take a look at the 5-minute chart. So we're looking for the pattern after the pattern. Now, 5-minute chart obviously is getting a bit choppier, but we do have a triangle right here, or flag right here. That's the first pattern after the pattern. So break of that pattern would warrant the entry, and you get 40 pips follow through, which is not bad on the 5-minute chart, right? Right there. So that's the pattern after the pattern on the 5. Now, I wouldn't go from 5 to 1 minute, but I think you get the point. All right, so that is the idea. So let's see if we can find any contemporary patterns that we might have skipped. We're getting the break on the pound, by the way. Look at that. Is there any pattern that I might have missed? Well, basically on a hourly chart, this was a contracting triangle. So we can move to the 50-minute chart. What was the first pattern after the pattern? Let's take a look. On a 50-minute chart, maybe this one, or this one, or even here. Those are all patterns after the pattern. So those are 50-minute setups to the upside. So the 50-minute patterns on this hourly breakout have already occurred. All right, so this is maybe a new pattern. This is a zigzag pattern. So let's go again to the 50-minute chart. What is the first pattern after the pattern? Probably here, actually. So we're waiting for, from that point of view, from a pattern point of view, waiting for a new pattern. And that could be this. It could be a sideways flag like that, perhaps. But it depends. If price starts to break down, then that will not occur. So at this point, it seems to be relatively quite weak. 4-hour chart still looks okay to me. But obviously, if this 4-hour candle fails and is bearish, then I would definitely market exit. And it's losing steam, and it's the R2R, considering the R2R, the weak R2R, considering the failure then to continue, if there is a bearish 4-hour candle 1 hour and 5 minutes from now, I'm out of that trade. I don't think it's worth it. I don't think it has a good chance anymore to continue. So I'm still patient, but my patience is nearing its end. It's Let's see if there's any pattern at the moment that we missed. Let's take a look. All right, maybe the Euro odd has it. We have a 1 hour, I think. Sometimes there are multiple patterns on multiple time frames, right? This one could be a 4 hour triangle even. But let's consider it a 1 hour triangle. Maybe better. Fits better on the hourly chart. 1 hour triangle, we got a break of that hourly triangle, so let's go to the 15. Do we see any pattern after the 50-minute chart, after the break? No, not yet. So any pattern that occurs here could be a good follow through on the Euro odd. So we had the big pattern break on the hourly chart. So we can look for the small pattern now, which hasn't occurred yet, but could anytime soon, like a bear flag, for instance. We can put it from here to here. Wait for a bear flag to the 38.2 fib, and that could be a good pattern, a good smaller pattern after the big pattern break for follow through to the downside. So, well, folks, thank you so much for being here. At any point, of course, just feel free to ask any questions. Sometimes maybe I keep throwing in new info, so just feel free to stop me at any point. Really, it's no problem. And tomorrow we're going to take a look at strategy. We had 3 votes on waves, so that is the winner for tomorrow. But Fibonacci and alligator, we can do Tuesday or Wednesday or both. Let's see next week. So tomorrow night, Nana takes a look at multiple time frame. This week, Thursday, Nana and I take a look at price action, part 1 and 2. So it's going to be Thursday, June 2 and June 9. So those are the upcoming webinars. Of course, you can take a look at Ivan Markets Analytics as well, right here, and articles and stuff like that, and Traders Blog. So there's a lot of things you can find here. So, okay. Well, that wraps up things. Thanks so much. Talk to you soon. Cheers.